What's up YouTube, it's Louis here bringing you today's cryptocurrency video. So we're going to look at FIRO, but I cannot stress guys, the altcoin charts are literally, like, they're good when it's bullish, right? We're going to do technical analysis when it's bullish, but when it's bearish, like, it can go down so much. Like, it can have technical targets to the downside that are so bad, but it doesn't mean that they're going to meet them, because in my opinion, well, a lot of people will agree with me, the only chart that matters in a dip is Bitcoin and the total market cap chart, and that is why I'm going to constantly be bringing you Bitcoin videos, and you must be watching them, because as again, that's the only chart that matters when you're in a dip. There could be mad technical targets to the downside on FIRO or any coin that you're in, but they don't have to be met, the targets. If Bitcoin switches around, they will not meet their targets and they'll just go up. As I keep saying in every single video, I'm going to keep reiterating it, because I have a lot of people say, like, oh Louis, but what about this chart? What about this chart? Again, only Bitcoin matters. I'm going to show you why in a second. So we're going to start on the full hour, but then we're going to go to the daily for FIRO. So make sure you give this video a thumbs up, turn the notification bells on, subscribe, and thank you everyone for getting me to 400 subscribers. It means the world to me, honestly. Like, I was trying YouTube a year ago and it just wasn't working out at all. I was getting like 20 views per video or something like that, but obviously never gave up, and we're here today. And I just want to tell everyone that I'm trying to get to 500 subscribers by at the end of the year. Let's see if we can get there, guys. So FIRO on the 4 hour, yesterday I gave you the fibs for the Evergrande dip. So you measure the impulsive wave back up, the retracement before dipping down, and we were looking at those levels that we could come to, and I think yesterday we're in around the 1.272 and we didn't go any lower, or we had this wick down but we didn't reach the 1618. So now we have met the 1618, and of course if we were to get back above the 1 at $7.95, then the dip would be over. If you don't get above it, then we're going to carry on the dip basically. And so what are the targets next? So I would say that the 2.272 is potentially where we end the dip, and I did give this to you guys yesterday, I think. So what's going to happen is we may have a relief rally, or this could have been the relief rally, and then carry on down to here. If you get back above the 1618 and you keep failing to break below that, right now you've got no signs of that, you've come down to it once. You need to like constantly hold that, like it has to have so many attempts of trying to break it, and if it can't, then once we get above the 1, that's when I can say, yeah, we're not going to go any further down. But until then, it's high chance that we do break this low, and if you do, I want to see it back tested as resistance, and then it'll come to the 2.272 at $6.90. I'm going to give you some further downside targets, and obviously I don't want to be a bear, but I don't want to be a perma bull, I don't want to be a moon boy, so I'm going to just be straight with you guys and just tell you what I see. So first of all, I was measuring the Evergrande dip, but we have to look at the entire structure, and we had a massive impulsive wave down and a retracement back up. So this is actually where we need to measure the fibs, because it looks like we're going to continue down. So look where that 1618 is lining up with. I'm going to put the previous fibs back on. So that 1618 is lining up with the 2.272. The 2.272 is in between the 1414 and the 1618. So it's this area that's going to be tested. Now, if we were to come down here, I wouldn't say that the candle will close here. I would say that the candle will close up in this white zone, and we could wick down to here. And I'm going to go into further detail why we probably are going to come around the $6.50 to $6.94 or $7 mark. So I'm going to delete all the fibs now. So when you lost this low here, $7.76, this green line where we were at yesterday, this is where you've now put this in play, basically the 1618. So I'm going to delete that now, because we know that anywhere between $6, for now we say anything between $6.74 and what was it, $7 we're going to come to. But I'm going to show you a case where we could come down to $6.50 as well. So I'm now going to, so yeah, just before that, obviously we can see that we have this rising wedge, but it's a bit clear on the daily, so I will go there now. So on the daily, you can see this rising wedge, and with any wedge, your technical target is the bottom of the wedge. Now, the bottom of the wedge could be the candlestick, the body, or the wick. And so the wick is here sitting at $6.50. So this is the case where we could come to $6.50 because that's where the wick is. And the bodies are in this zone where that 2.272 is and that larger 1618 is of those two Fibonacci's retracements that I've shown you. So yeah, these either this or this will potentially be our bottom. Right now you're holding the 200 on the daily, which is bullish, and usually you do hold this, but a lot of the time you can go in and out between it through it. But as long as you're not, when I mean that, you can, as in you can do this, get back above, go down, good, and then eventually get back above. But as long as you're not falling below and hitting your head on it, then if you do that, then we're going to see further downside, because that's confirming a daily downtrend, and we really don't want that, guys. But again, you could literally come down below this and hit your head and come down. But if Bitcoin wants to turn around, as I said, guys, doesn't matter what your altcoin chart looks like. If Bitcoin wants to turn around, this will just fly up, okay? Same with any chart. So there is a very negative pattern on the chart right now on the daily time frame. It's very ugly, guys, and it's a head and shoulders pattern. Shoulder, head, and a shoulder. And we had it over here as well. Shoulder, head, shoulder. Now, guys, the good news about this is with this one, it didn't meet its technical target. And I wonder why. Why? The point that I keep telling you guys. Just because it has a technical target to the downside, it does not mean it will go there. And why? Because Bitcoin. This went down because Bitcoin was going down, okay? But I'll show you its technical target actually right now. So look at that. You're way off your technical target. Just because you get put into a technical target, it does not mean you're going down there. If FIRO went down here, that is your bear market, but it didn't. And why didn't it? Because Bitcoin picked up, okay? Bitcoin had a dip in September where we went down 25% and everyone was bearish, but we needed to come back to test key levels of support, and that was this double bottom over here, this neckline. So this could even be a zone where we could come back to again, but I don't see that right now, but I'm just going to put it out there for you guys. So that is the level of $5.43. And remember, guys, when I said if we go below $5, that is basically your bear market. But I want to see us hitting our head on $5. I want us to go below 5 and fail to get back above and hit our head on the resistance multiple times. And that's when I say, okay, yeah, bear market. But until then, I'm not seeing that. And so here we had this head and shoulders, and your technical target was down here, $2.40. But just because that's your target, it does not mean we're going there. This is your neckline, this white box. Where is this white box? This is also your target of the falling wedge. Can you see that, guys? I know there's a lot of lines on the chart, so let me take off the moving averages, because the moving averages always get in the way, guys. So can you see shoulder, or you can even say this whole entire structure is your shoulder, head, shoulder, and this is your neckline. You put this on the break of the neckline, target's at $2.40. You didn't meet your target. This pattern gets invalidated once you get back above the neckline and confirm it as support. You confirmed it as a support with a double bottom. So this over here could be exactly like over here. You had this fat head and shoulders, and yes, you had a target down there, but all we needed to do with this head and shoulders is come back to here and retest that neckline, and you've got a W bottom there, and that's where we are right now, and that's at $7.40. So yes, $7.40 could be the bottom, but I've shown you and given you many cases for why we're going to come down even lower, because of the falling wedge target or the rising wedge target. So now I'm going to show you the target for this ugly head and shoulders. So I'm going to just delete that line for now and bring it back after. So this is going to be your neckline over here, going through support. Let me drag that bit up. There we go. Support, lost it. Support again, lost it. Because you lost it, that puts you in a technical target to the downside. But remember, this pattern can be invalidated. How can it be invalidated? Get back above this line. We can even say this line. So if we were to get above $8.15 and confirm that as support, it's highly likely that you're going to get back above this line. And obviously it depends how where you come back, because this is ascending. So your technical target literally would be down here at $4. Guys, remember, it does not have to come down there, and if it does, it's so bearish, and it is the bear market. I can't lie to you guys, because that would mean that this is a very large M top And remember, this is not an M top. Don't get bearish on me, guys. This is not an M pattern until you lose the neckline, okay? So until you do that, it's not going to happen, okay? It can literally look like an M, but it's not going to happen until you lose that. You could come all the way down to here, all the way down to here. But if you're not breaking this, you're not going to get the further downside. You could literally pump up from there and you create a double bottom, okay? So just because something looks like an M or something looks like a W does not mean it is until you break the confirmation, which is the neckline. So see 1 bottom 2. This wouldn't have happened. This wouldn't have been a W unless you broke this, and you did. So now it is a W. Even though you have 1 bottom 2, it's only a W when you break this, or double bottom when you break that. Same with here. You have 1, 2. But that only came into play when you broke the neckline. If it didn't, then it would have been a double top, wouldn't it? Because 1, and you failed to break it, look, and now it would have been an M. Do you see that? This is trading for you guys. It's here to manipulate you into thinking, oh yeah, oh my gosh, it's bearish, or oh my gosh, it's bullish, when it's completely not. Because you have to break certain levels for it to confirm to be that. So yeah, we've got a target of $4, but just because we're in a target to there, it doesn't mean we're going there. All I can say is that, yeah, we're in a target to down there, but along the way to that target, we're going to meet key levels of support. And at these key levels of support, meaning these areas over here, you can have a massive bounce. And if you do, you're creating a massive double bottom. Do you see that, guys? Or 1 bottom 2. It depends where it wants to come down to. You could bottom out here. The only way I agree, if it is a bottom, if you get back above here. If not, we are still coming down to here because this is your falling wedge target. Perfect, guys. I hope you enjoyed today's fire update. I'll bring you out another one tomorrow. Catch you in the next one. Peace.